All right, welcome everyone. Happy Hour with the Lincoln, episode number 34. And how about a bottoms up? Double cheers to everyone out there who's clicking this mouse or smacking those hotkeys, whichever way you do it in this market, just trying to get your little slice of the pie, because I tell you, it's been a wild one. But as I've talked about, in these last few happy hours, these last couple whiteboards and educational videos, this is some of the very best times you will ever see when this volatility is just injected into the market. Will be some of the best opportunities that you ever have to make some money. So if you're kind of struggling, or you just don't know how to capitalize on it, take a moment, visit thelincolnlist.com and trade live with us every day. We'll walk you through it step by step. So we got some good questions here. Now, before I start, I always say, you guys got questions? I want you to bring them. Just bring them to me. Support@thelincolnlist.com is my email. I'll do what I can to get them in the next couple of happy hours. Now, we got some good stuff we're going to talk about today. We're going to talk a little bit more about this market crash and people struggling out there with it and wanting to know what to do. We're going to talk about how long it takes to become a professional trader and a couple of other things. So again, why don't we not waste any time? Let's get right into it. Do a little drinking, do a little talking, because I need it, because this market, even though it's been good, it's been a little exhausting. So let's get down to the first question here. All right. Hey, Doug. I like how you spelled that there, digging a hole. On your last video, you said you were trading in 2001 and 2008 when the market crashed. From your experience, how long do you think this market crashes? I have some extra money I want to put in the market, but I want to make sure it's the bottom. All right, well, let's kind of look at it this way. This is a few-part question. Yes, I was trading in 01 and 08. So if we're going to compare, I don't want to call, first let me just go back and say this is, I wouldn't call this a market crash. It's a market correction right now. There's a difference between a market crash and a market correction. But yes, I traded through the 2001.com and also the 2008 financial crisis. Now, if I can compare each three of the corrections, I don't want to say this is a crash because it's not, but if I can compare those corrections, what were different is if you go back to 2001, a lot of those companies were just bogus, to put it nicely. I mean, everybody was jumping on the bandwagon of .com. If you had any business, you put a .com at the end of it, then your stock just went through the roof. And some of these had okay business plans. Other ones were just trying to cash in. And that's basically all there is to it. And we've seen mini bubbles like that. For some of you longer-term traders, been around like rare earths, the Ebola thing. You always got somebody just jumping on that bandwagon. But so when we look back at 2001, a lot of those companies were trading at enormously high valuations and never turned a dime in profit. And it was really in the infancy. So you can kind of understand where that came from when they were all figured out that most of them were junk and had no real business, because some of the stuff they were pitching back then didn't come to fruition until just a few years ago. That's how far ahead of the curve they were. Now, 08 was a little different, because in 2008, the real problem there, I can still remember the pictures where people were lined up out and they couldn't withdraw money from their bank. So there was this period of time where you really thought that maybe my damn bank is going to go out of business, that maybe the whole financial, complex of the, that's not even the right word, I don't know what the hell I'm trying to say, but the whole financial system of the United States is about ready to go under. I mean, there was really that period of time, and that was some heavy-duty fear. So that was a much deeper correction. Here what we have, I just think it's simple as being overbought. I mean, you got to think, these companies have been reporting some really good earnings. They have some really great products. It's a really optimistic time for trading with a lot of great things going on. But this market's been linear for a very long time. It's been very bullish. And this is just something that comes with a natural cycle of trading in the market. So I think these companies were just overbought. People just got a little ahead of themselves, and it's a healthy correction. Now, what I did is I Xerox copied this. I know you guys can't see it, so what I'm going to do is everyone a favor, and I'm going to post it just up on the screen so you can see it. And it kind of just shows you the rhythm, these blue things, if you can see it. This just shows you how long the markets are in bullish territory, you know. And then these little orange spots right here at the bottom is how long the corrections are. And sometimes they last 3 months, 6 months, 1 year, a couple years. But you can see that the rhythm of the market is you go through these cycles of bullish where it's linear and the market's running up several years at a time, and then it's just part of the market doing business and it goes through a correction phase. Now, I can't specifically answer the question on how long. That's not up to, if I knew that, I'd be a multi-billionaire. I mean, if we all knew that kind of information, we'd be rich, but we don't. We just have to take it day by day and look at our levels and go from there. Now, as far as extra money, I can't tell you whether to do that or not, because I don't know what your time horizons are or what your strategies are. If you're let's say you're an investor, is this something, I mean, you look at a chart like this, Is this something that's going to hurt you long term? Hell no. It's actually probably a really good time for you to purchase stocks. Pick a list of stuff that you really want to own and pick it up at a discount. Now, it still may go down. We may see lower rotations in the next 6 months. We may be through a bearish year or 2 years, but if you put a little bit of money in there each time and you have a long-term focus, just stay the course with your investing, you're going to be fine. Like I said in the last happy hour, we're going to come together as a country. We'll be just fine. Over time, the stock market goes up, and you'll just do fine if you're doing that. If you're a trader, it's a completely different thing. You just really have to take it day by day. So again, nobody can guess the bottom. I have no idea how long this is going to be. Traders, you take it day by day. Investors, you just stay the course and keep investing. So if that answers the question. We move on. Next question. I started about 8 months ago, and I'm spending at least 2 hours every day studying my charts, my entries, volume, and VWAPs. My results so far have been hit or miss. Should I be studying more? I don't have much more time due to my job. Well, that's a very good question. I'm going to answer it like this. When you're in the beginning part of your career, you do study a lot. But the real studying doesn't come from books and DVDs. Those things help you get an idea of a strategy and some other psychological aspects of trading. But the real study comes from watching as much as the live market as you can. That's what you're after, is that screen time. That 6 hours, 6.5 hours every day that the market is live and open. You want to expose yourself as much as possible to that, because all that books doesn't matter. That doesn't matter. What matters is real life trading. So think of it this way. If you went to a race car course, and all they taught you was you watched some videos on race cars and you sat in a simulated race car, how fast could you drive? Where are you really going to learn how to drive? You know what I'm saying? You're going to learn by getting out on the track, racing with other people. That's how you learn. So you need to be trading. You need to be involved in the market. You need to see it live. That's where your real study comes from. Now, a lot of people will have jobs. They'll have to work jobs. I've done that before too in my early career. And you might not be able to stay around for the market. A great thing to do is Thinkorswim has a on-demand replay where you can go back in time and you can watch any day live as it play out. Of course, it's not live, it's recorded, but you can watch it as it was in real time. This is a good way for you to go back and just look at certain charts, look how breakouts work, look how breakdowns work, or whatever your strategy is, look how the market itself works, look how people congregate around a certain level of a stock's price and so on, and watch that. You're going to learn more by watching and observing a real-time market environment than you ever will with books and stuff. So in the beginning, yes, you study, but as time goes on, you'll actually do less book study and more FaceTime study. And after a while, you'll just be so immersed in the market, you'll be actually living this lifestyle that you probably won't study at all. You'll know. Like right now, with what I do with the videos and everything else, I just know. I know where anything is at, where it's trading at, how it's been trading, and so on. So hopefully that helps you out. And the last question for today will be, how long should I give myself? I've been at this for 2 years now, and I'm still not able to make any real money. Things have been going good lately, but then this market correction really took it all away. If not making it after 2 years a sign I will never make it? Question mark. Does this take most people in your experiences longer? Do they even stick around that long? I feel I should have quit. Okay, so let's answer this one. I think what you're asking is 2 years too long. Should you already be a gabillionaire in 2 years? No, you shouldn't. Is 2 years too long to learn how to trade? Or if you're struggling at 2 years, is that a bad sign? No, actually, it's not. If you're still doing it after 2 years, that's a good sign. That shows that you have commitment and you're really trying to make this thing work. And that answers that last part of the question about, I feel I should quit. No, because that's what your passion is. That's why you're still here after 2 years. That's why you're still going through the struggles, the triumphs and tribulations, is because deep in your heart, that's your passion, and that's what you want to do. Now, if we go back and we answer the question about 2 years time frames for traders, again, this is just like the market correction. Nobody really knows how long it takes an individual. Some people like myself who have slower comprehension skills, it took a while to understand how the market worked. It took some time to go through certain things in my career, and I did some things early on that hindered it. But I once asked my mentor how long it was going to take me, and his answer was pretty simple: about as long as a piece of string. So, really, who cares how long it takes you? If you really want to do it, you'll figure out a way to make it work. I can only say in my experiences that for me, it was a staircase. It wasn't like a snap of a finger and I just instantly became successful. It started out with, I got hammered in the .com. I lost my money and I was scared to trade. I learned how to trade, but I was still afraid to pull the trigger, which is what we talked about before. Once I got over the fear of pulling the trigger, I couldn't stay in trades long enough. Then once I could stay in trades long enough, I had trouble with sizing because I didn't want to put any size or any money at risk. So each and every problem that you conquer, a new one will rise, and you need to give yourself that time. But if you're partially consistent after 2 years, you've got a system down, you're just bouncing around with a couple of things, you're on the right tracks. For most people, it's going to take them a good 2 to 5 years to really learn how to do it before they can make money. That's how long it took me, was 5 years. So don't rush yourself. This is a long process. I know it's not a selling thing, but that's trading. You really got to put in the time and the work. So anyway, guys, I'm going to end it right there. I think it's been a pretty good happy hour. We talked about market corrections. We talked about some really good stuff. How long does it take? How much time should you study? Remember, everything is about face time. Trading is a process that's day by day. You got to put in the work. You got to learn from your mistakes, and you've got to build each and every thing you put in your toolkit is something that builds success for you later. For some people, that success will happen early, and just like other things in life, it'll take a little bit longer. It doesn't matter how long it takes you or what road you take, as long as we all end up in that successful train at the very end. That's what we're all in this for. So again, until the next happy hour, my friends, take care and cheers.